Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 24th of June, 2023, and it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the fourth week of June. And as we look across all the three major pairs, they are similar, but with unique differences here. The Euro did attempt to climb up higher on Wednesday, but then after hitting the key 110 round figure again, it fell and pulled back lower, back into a support zone. The cable could not climb up higher above the extension, 138 FIB extension, even after the very strong rate hike by the Bank of England of 50 basis points instead of 25 basis points expected, but then still could not break out higher and pull back lower. However, it was the only one that managed to consolidate and stay above the recent highs. Whereas for the Aussie, after pushing well up and hitting a round figure of 69 the previous week, at the end of the previous week, it fell pretty hard all the way until Friday as well. And only common factor among these three is on Friday, all of them fell with poor flash PMIs for each of their economies. So that was the drag for all these major pairs. And we'll see what the major news drivers were for last week and what's coming up this week for the final week of June. And see how the US dollar is going to react as well. All right. Well, last week, the main drivers was basically the Fed Chair Powell's testimony on Wednesday and Thursday, where he reiterated their hawkish stance with a projection of further 50 basis points increase by the end of the year, and as well as highlighted that there will be no rate cuts for this year. So that's put a dampener on the markets. And prior to that, on the UK economy, the CPI came out higher than expected again. And this probably influenced the Bank of England's decision to increase rate by 50 basis points instead of just 25, and now it's up to 5%. So that was a strong hawkish move by the Bank of England to tighten the monetary policy further and try to get ahead of the high inflation, and likely projecting perhaps increase all the way to 5.75%. So that's another probably 3 more rate hikes of 25 basis points each. And also no rate hikes in the near future as well. And then on the Friday, all the major economies showed lower than expected flash manufacturing and services PMIs. All of them showed weakness in both of these major sectors. Even the US continued to lag with their manufacturing weakness, and only services was slightly better than expected. So Friday was a drag for all the major economies and pulled all the currencies down, whereas the US dollar benefited from that. Looking ahead for this week, there's more CPI data coming out the Australian economy and as well as the Eurozone. But the key one this week will be the US core PCE price index, where they're still forecasting a fairly high rate, and the previous month as well was also at 0.4%, so they're still keeping the rate high, or expecting that it will be high as well. Okay, and meanwhile, there's also an event with where the central bankers, the governors, and Fed Chair Powell will be giving speeches for that event. So we'll see if there's any impact on that. It shouldn't be anything new. Right, so that's what to look out for. With E1 is the PCE price index for Friday, the final day of the month as well. All right, so let's move back to the analysis. So starting with the euro, after drifting lower for the first couple of days of the week after a strong close the previous previous Thursday after the ECB's rate hike, did manage to continue its bullish move in a rising tree methods pattern, but blocked again by the 110 key round figure, and after failing on Thursday, was brought back down lower to the 50-pip retracement level, and that was the Friday's poor PMIs from Eurozone, both French, German, and overall Eurozone was all bad. So that pulled the euro lower, and we'll likely see the inverse relationship with the US dollar index next. And this coming week, there's the flash estimate for the Eurozone CPI, and of course the US core PCE price index. It will also be a factor that could trigger moves as well on the euro. And let's take a look on the weekly time frame. And close as a spinning top after trying to recover back up and blocked at the 78.6 retracement, fib retracement, and there could be further bearish retracement here for this coming week. So it looks like it actually attempted to test the 55 EMA. So let's mark that as our interim support. And along with the 108 and the 38 fib retracement area, we likely can move this one up here now to the 21 fib retracement for a strong support level. Resistance is still confirmed at the 110 and the 78.6 fib retracement, so that's still going to be a strong resistance zone. So it could be just further consolidation this week, and we'll see how much these news will impact the US dollar and affect the euro. But looks like it's likely going to consolidate within the range. Otherwise, it could just dip a bit lower before attempting to settle perhaps around the 50 fib at the 108.60 area. All right, let's compare this with the US dollar index. Here's the DXY, US dollar index, the inverse correlation with the euro did work out as Thursday and Friday. It did manage to climb back up and retested the 38 fib retracement area. It did, however, dip lower on Wednesday to below the trend line and the 62 fib retracement, but then managed to recover back on Thursday and Friday. Friday due to the weakness in the PMIs for the other economies and versus the relative to US economy. So US dollar took advantage on got a boost on the Friday. On the weekly time frame, that's important support there. We'll see if there's further bullish continuation this week. And support at the 786 is still key as a strong support level there. And this area, of course, is still a critical interim support at the 62 fib retracement. Interim resistance still at the 38 fib. And as well as the 103 round figure, that's a key support resistance level as well. Needs to break through that to try to climb back up towards the daily 200 EMA. But trying to get through 103 will be key. And also we can see a triangle that's forming. It's basically the US dollar is still consolidating. All right. So let's see if it's able to get back up above 103, whether it's going to be blocked there. But even though if it's able to recover above the 200, there is a very strong trend line that's in its path. So key news, there are other relatively minor news from the US as well, but the key one is the core PCE price index, where the Fed likes to take a look at this figure as the main inflation figure. All right, so I think for the fibs, we'll leave it as that. It seems to be still consolidating within this swing range. Okay, so another week to go for the month. We'll see how far the US dollar can recover from this on a weekly time frame. Yes, it's also blocked further up by the weekly 55 EMA, so that's at the 103, just above the 103 as well. So that could further impede its progress. Okay, so let's move back to the other pairs. Moving on to the cable, and that will be a good indication for the rest of the sterling pairs as well. And cable has been the only one that has been resistant against the US dollar recovery, and has been on a strong climb recently, moving ahead of expected rate hike by the BOE. And however, it was likely moving before the news, and probably going to sell off on the news, buy the rumor, sell the news type. However, it did surprise the market with a 50 basis points increase rather than just 25, and that allowed the cable to retest the 138 Fib extension and the recent highs, but they could not continue to climb up higher into the 129. And once it was rejected, then it's coming back down towards the interim support level. So that's why it's was able to retrace back down to the 127 and the previous swing high here as well. It did not fall through further, so that's another strong support below that, and we'll see if it's going to break down further. It's definitely a strong support at the 78.6. On the weekly time frame, it's more like a retracement pullback type of candle, just above, just falling back below the weekly 200 EMA. It's still possible that it could drive further up towards the 129 and the 162 Fib extension. Still looking bullish for now. And if we do use this retracement Fib, it has just dipped below the 21 Fib. And it needs to pull back further if there's a stronger retracement, and likely back down to the 50 Fib level, or perhaps only just to the 38 Fib retracement area at the 126.40 area. So if we use this swing, we'll see how far more retracement there is, and if it's finding support, then they could attempt to test this swing high at the 128.48 again. Okay, but for now, it's still has strong support, and that's because the forward projections for further rate hikes has probably another 3 more rate hikes for the Bank of England. So it could be in August, September, and November for additional 75 basis points. So that's why it's still holding up and not falling too far. Right, yeah, I think we'll leave this retracement as it is. We could still, and 130 of course is a major resistance area. We could still leave this Fib reversal move as it is, because the next target is going to be at 129. That's in alignment there. So we could just leave this here for now. And let's move this up here to the 126 is the 786 level. So for now, let's leave it as it is. All right, let's move on to the Aussie dollar, where unfortunately it was not able to hold its support at the 786 retracement area and fell all the way through the 67 and the daily 55 EMA down to the 62 fib retracement. So very significant retracement here. And if we take this swing move, it has fallen to the 50 fib already, just below the 66.80 area. So let's update this fib here, and a major resistance at 69, the recent high. Next resistance area at the 68, along with the 786 retracement. And now the major support is back down to, actually is the 62 fib retracement. So if we set this around for retracement level, that's the 62 fib. Okay. So there should be strong support, and Friday, because also with the apart from the PMIs, also the commodity prices fell, especially copper on Friday, so that pulled the Aussie dollar lower, since it's a commodity pair, and fell back below this trend line, this rising trend line. And if we do extend this area, so it was not able to test that trend line. Okay, on the weekly time frame, it's a significant engulfing, bearish engulfing move here. So there could be further bearish momentum. And we'll see whether it's going to come back to this recent support zone. And that's why the 62 fib retracement at 66.27, that's going to be a critical support. Okay, there is also Australian CPI on Wednesday, and it's also exposed to the US PCE price index on Friday. So this is going to be a critical week for the Aussie dollar to see how far it's going to pull back lower, and whether the US dollar is going to continue to push up higher. Right, but at the moment there's a lot of bearish momentum. Okay, so do check out my other videos on spot gold and dollar yen, and have a good week and a safe trading week as well. And cheers for now.